Interested in establishing long-term wealth and financial security? Buying assets that will increase in value over time can be a wise move. You may build money that will last a lifetime by investing in assets that have the potential to increase in value over time. Welcome to the Money Bender. Subscribe and let's dive in. In this video, we look at 7 assets that can give you long-term financial security and wealth accumulation. These assets, which range from equities to real estate, have withstood the test of time and shown to be excellent long-term investments. Let's discuss the assets you ought to think about owning for the rest of your life. Stocks. Because they reflect the equity or ownership in a company, stocks are fantastic investments. They are also one of the most reliable methods to build money over the long term. History demonstrates that equities have consistently produced long-term gains 3% minus 6% over bills across the board. Stocks also don't need regular maintenance from you and don't need regular maintenance from you. You can invest in stocks by buying individual shares or a fund that gives you a larger stock exposure. On the subject of the kinds of stocks you ought to own, opinions diverge. Some contend that you should pay attention to size, others that you should pay attention to values, and still others that you should pay attention to price patterns. Finally, dividends are simply company profits distributed to its shareholders, or you. The most crucial information in this essay is that stocks are extremely volatile and challenging to retain during unrest. Focusing on the long term is the best strategy for overcoming such emotional instability because time is a stock investor's friend, not enemy. Stocks are simple to own, trade, and maintain since they yield an average compounded yearly return of 6% to 10%. Pros: high historical returns, tradability, and inexpensive upkeep. Cons: high volatility. Valuations are subject to abrupt changes based more on sentiment than actual performance. Bonds. Bonds are loans that investors make to borrowers to be repaid over a predetermined time frame. Bonds with the U.S. government as the borrower, also known as Treasury bonds, are what most investors mean. U.S. Treasury bonds are available in a variety of maturities and periods, and their titles vary according to how long those durations are. In addition to paying higher interest than U.S. Treasury bonds, foreign government, corporate, and municipal bonds also carry high risk due to the fact that the U.S. Treasury is the world's most credit-worthy borrower. I typically solely invest in U.S. Treasury bonds because of this. Bonds are an income-producing asset that has a more stable revenue stream than other assets and can act as dry powder when rebalancing a portfolio. Bonds offer less volatility than stocks and other hazardous investments, making them more constant and reliable even in the worst of times. For instance, during the 2020 coronavirus crash, portfolios with more bonds, that is, treasuries, did better, and those that owned bonds and were able to rebalance during the fall benefited even more during the rebound that followed. Bonds' typical compounded yearly return ranges from 2% to 4%, and they can contribute significantly to your portfolio in addition to growth. Negative income in a low-rate environment and low returns, particularly after inflation. Investment vacation properties. In addition to stocks and bonds, investment vacation properties are a common income-producing asset that many people take into account when looking to increase their wealth. These homes not only offer a place to unwind, but they also present a way to supplement your income. Renters can help pay off the mortgage by managing the property well and benefit from the property's long-term appreciation. Additionally, because of the additional leverage provided by borrowing money to buy the property, returns may improve. But owning a rental or vacation home has its own set of difficulties. This type of property demands continual attention to detail, including managing renters, maintaining the property, and more, unlike other assets that may be set and forgot. Furthermore, it increases the balance sheet's liability, which could lead to more stress. Even while the returns on investment properties can be greater than those on stocks and bonds, they are much harder to achieve. The difficulties many Airbnb business owners will encounter in 2020 show that holiday rentals aren't always easy. It's critical to keep in mind that this kind of investment carries a considerable amount of risk. An investment vacation property could be a useful addition to your portfolio if you value tangible assets like real estate and want more control over your investments. However, it's crucial to thoroughly consider your unique situation and your capacity to handle the property well. The normal compounded yearly return on investment vacation properties is between 12% and 15%, though individual conditions may affect this. Although there is a chance for higher profits, it's crucial to take into account the additional work and the hazards that come with this kind of investing. A well-rounded investment strategy should take into account the fact that investment in vacation properties are less diversified than other types of assets. Real estate investment trusts rights. Using real estate investment trusts rights, a special kind of investment, people can participate in the real estate market without having to deal with the inconvenience of managing the buildings themselves. Apartment buildings, shopping malls, office buildings, and industrial parks are examples of the types of properties that rights own and manage. Investors can share ownership of a portfolio of properties that generate income through rent, leases, and other sources by making an investment in a REIT. Private, publicly non-traded, and publicly listed rights are the three different categories. Any investor can buy publicly traded rights because they are listed on a stock exchange. They give access to liquidity and make it simple to buy and sell shares. Contrarily, only accredited investors can own private rights, which are not listed on a stock exchange. In comparison to publicly traded rights, they frequently demand a sizable investment and provide less liquidity. Despite not being listed on a stock exchange, publicly non-traded rights are open to all investors. Compared to conventional publicly traded rights, they have larger potential profits but also greater risk. Small businesses, franchise or angel investing. Small companies, franchises, and angel investing. If owning farmland isn't your thing, you might want to think about owning a small business or a stake in one. You must make the decision if you will run the company or just give the necessary funds and expertise before starting this adventure. Occupant and operator. If you wish to own and operate a small business or franchise, keep in mind that it will probably need more labor than you anticipate. Only own if you decide against becoming an operator. Becoming an angel investor or a passive owner of a tiny business can result in extremely high returns. These results do have a significant bias, though. According to a research by the Angel Capital Association, only 1 in 9 angel investments, 11%, produced a profit. Investing in small businesses can be difficult and profitable, but it can also take a lot of time. Tucker Max stopped up on angel investing for this reason, and he believes most people shouldn't even start. According to Max, you need to be well integrated into the community if you want access to the finest angel investments, that is, those with large, outsized returns. It is exceedingly improbable that microventures will have early access to the next great thing, despite the fact that companies like microventures allow individual investors to participate in small enterprises. Successful small company investors put more than simply money into this endeavor in order to succeed. There is no one strategy that will make you wealthy indefinitely. Owning assets that generate income, however, can assist you in creating a solid financial foundation and achieving your long-term objectives. There are several ways to increase your wealth, from dividend-paying equities to real estate and rights. Just keep in mind that investing is a journey rather than a destination. Therefore, it's crucial to enjoy yourself in the process. Don't be afraid to experiment and take calculated chances, but be aware of the drawbacks as well. Always do your research and, if necessary, consult a specialist. You may create a diversified portfolio of assets that will give you the financial stability and independence you deserve with time, effort, and a little luck. So, go ahead and start your journey towards wealth and happiness today. Thanks for watching. Follow for more.